Hi, let's talk about Bsquare. It's a company that made already almost 200% by this trading day. So it's a company that provides software solutions and related engineering services to business that develop, market, and sell standalone intelligence system in North America, Europe, and Asia. Market cap is not so big. It's I think it does not have meaningful market cap, which is currently 35 million. Earnings have declined by 20% per year over the past 5 years. Significant insider selling over the past 3 months. Shareholders have been diluted in the past year. So Snowflake looks like mostly green on health, and many of the small market cap companies could possibly do this kind of movements. 191% by this day so far. This is pretty huge returns. Anyway, let's have a look on the latest share price and events that have been made. So mostly earnings updates made the return, huge return. This is actually by yesterday's trading day close. So 1 year return 64%, beats the industry, beats the market. But as you all know, those companies that are making huge returns and huge drops, they are long-term. Price volatility considered as the highest. The industry itself is lower than the average market volatility. Valuation sites on simple Wall Street, neither the tip ranks does not have price targets, but fortunately I found the market watch $12 per share, so it has made already 200 almost percent, and it has still upside. But make sure that this is actually very interesting situation. They had this year mid-February highest point 11, so this huge upside here is phenomenal, amazing. But they went down as fast as they did up, they did go down. And I think we can watch here. So yeah, 5-day return 235%, 1 month, 6 month, actually they had here. So those who invested in here were at around minus 70, 73%, and only now they're like minus 8%. So this is actually huge return, 6 month, 455%. Anyway, if we can open the max frame, this is not looking so good anymore. So they had even 200 per share back in 99.9, and mostly this has been red all time, minus 93. So this is actually one of the things that as an investor you should calculate this kind of volatility risks. And of course this might be squeezed if there's a lot of institutions investing, shorting, I mean, so they could be squeezed like this. So this is actually very, nowadays this is very usual, but when shorter institutions become actual buyers to close those positions that they're shorting. Anyway, future growth, but basically I'm doing fundamental analysis. Usually this kind of analysis and research is more likely to be done for the quality companies. Future growth 20% as a software industry. More past performance, so the company decreased by 20%. That is annual earning growth. We see the dynamic here since 2015-16. This is declining. Also, they had positive earnings that were declining to the year of 2019. Then they increased by so far from there. The company is unprofitable. And financial health side, we see here that they have a little bit of depth. Equity is decreasing, and they do have cash, 10 millions. Balance sheet looks like mostly green, a little bit of depth, 1.6 million. They're not paying dividends, and insider who were selling this one. So there's actually on both sides. Some of the companies and individual were buying, and recently this month they were selling. Not a significant of amount on both sides, but anyway. Ownership breakdown: general public holding 62%, hedge funds 19%, institutions 12%, and insiders 5.7%. Top shareholders I see mostly decreasing. Vanguard decreased, BlackRock increased a little bit, 0.15%. So we see here on both sides. Simple Safe Dividends shows that shares outstanding keep increasing every year and total sales are decreasing every year. This is actually, yeah, I see a lot of this same companies, and many institutions are most likely shorting this kind of companies where there's declining sales every year and shares outstanding keep increasing. So this is actually very big dilemma. So those kind of shares are so easily shorted, and then they got like squeezed. So this is actually very funny dilemma. But anyway, it's highly volatile share price, because one day you're inside, you could profit 380%. Those who invested at $8.4 per share could like believe that this could be $12, $15, $100, 10x's or so. They might be potentially losing it. So minus 70%. So if your risk-taking abilities allow you to take those kind of risks, that in a few months you could see minus 70% from your investments, try to not invest more than 1% of your portfolio, so you avoid kind of this risky situations, and it is more likely to be better buy some of the low-cost funds that are already diversified by many companies from different sectors and so on. Anyway, investing.com, summary the stock for long-term investors as a strong buy. And we see here, look at the volume. Actually, the volumes, I didn't mention that. Recently, over 200 million, 209 million. Let's read the comments. So is this actually the squeeze, or was there some of the news? So look at the volume. It's saying above it when it was up 80% today, and now we're up to 200%. What in the world is going on? Needless to say, I sold. Love the overbuying. I missing something here. Main stock. I 1 or 2. MRIN road to 50. Expectations. Why doesn't say big boys floating all the time? Just waiting for the bankruptcies. Then it's not. It's going. Look at that. So nobody. Yeah, see here. Nobody knows, but yeah. Anyway, thanks for watching this video. Subscribe to the channel, like the video, and see you in the future one.